Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the daily and short-term charts, going over exactly what is happening, whether or not Bitcoin is going to see a continuation lower, or will it find its balance and move back upwards. We're going to be taking a look at key warning signs on both the daily and the short-term charts you need to be paying attention to. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you're interested in taking your trading to the next level, join us in VIP. You can find out more information in the pinned comment of the free channel by clicking my name or these links. With nearly 700 members in the VIP, you'll get access to trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to all of our group chats, our general chat, our trading chart and education chat, our daily video, help, news, and trade setup chat. With nearly 700 members, go ahead, click that comment, and go sign up. Let's go ahead and jump on in. So taking a look at Bitcoin's price action, guys, we have seen Bitcoin essentially save itself by the skin of its teeth on the daily chart. We have been able to close the daily candle yet again above not only the trend line on the RSI, which is a representation of momentum, but of course the midline of the macro descending channel formation. We can go ahead and take a look at this midline and notice that every single time we close that daily candle underneath that level, we generally see steep corrections for Bitcoin, not always toward the range low, but at least to see a steep correction into that $50,000 region, $55,000, $56,000, $57,000 region. So it has literally saved itself on that daily close just moments ago, which is a great thing to see. Now, the short-term price action, we cannot say the same thing. We have seen a breakdown of this horizontal range, and with that breakdown we were actually able to see the price action bounce back within. This doesn't save the price action. The price action is still very much in a downtrend, which we'll be discussing in just a moment. We'll get to our short-term analysis, which, while is active, provides the possibility for rejections and continuations back downwards. So we're discussing that in today's video. Before we get into the crux of the analysis, let's move over to the market data. 24-hour volume is up 10%, sitting at 127 billion, and 24-hour liquidations at 190 million, up 13%. Of the 190 million in liquidations, 148 million have come from long positions and 42 million have come from short positions. Moving over to the DXY is still bouncing, sitting above the 200 moving average, and most importantly, that major critical support at 100. Provided it remains above 100, we are expecting again potential chop between this macro downtrend and that 100 horizontal. But again, at the end of the day, if we do drop below 100, we are expecting a multi-month correction for DXY. This will be incredibly bullish for risk assets. As you know, the DXY was posed for a move downwards until we had those global conflicts escalate in the Middle East, which again drives fear into the markets and strengthens the dollar. So we have seen the dollar rise up again with those conflicts developing, kind of saving itself from what would have been a continuation lower. Moving over to the S&P 500, still looking very bullish, looking fantastic. 20 hours remaining until the weekly candle closes, creating new highs as it moves. A new high has been formed at $5,846. We are expecting movements up to 6,000 for the S&P 500 in the macro, provided these weekly high points are able to sustain. That does mean if we do drop below $5,680, we would expect a correction back to our yearly lows, and only upon the loss of the yearly lows would we expect macro corrections downwards. So provided our yearly lows hold, we expect macro continuations on the high time frame. Provided our weekly highs hold, we expect those macro continuations to happen sooner rather than later. And that is it for the broader markets. Like we said, we are diving deep into the daily charts, discussing exactly what is happening, the short-term price action, but discussing this recent massive liquidity grab. This was a large liquidity grab toward the downside actually for a range break, and we're going to be taking a look at the possibility of what needs to happen for the price to move back up to the range high, and what needs to happen for the price to essentially fail and move down. We'll also be taking a look at this bounce and discussing whether or not we do have the strength within this bounce to actually facilitate a continuation, or if it is just a dead cat bounce following a steep liquidity grab. So before we get into that, guys, if you want to support yourself, support the channel, and support me, get 15% off all your trading fees for life. Sign up to any of the exchanges below, BitGet, BitUnix, or BingX. You'll get the discount on all of them. You can support yourself, trading, and support the channel. We'll play a quick ad and we'll jump back in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So we are starting on the daily chart, discussing essentially what has been a massive save for Bitcoin, but that really doesn't put Bitcoin out of the woods yet, as we have talked about on our Telegram channel, and I would like to refer you back to the Telegram channel to read this post. And this post is of absolute significance as it discusses the key weekly levels Bitcoin is going to need to close above to facilitate continuations, and of course the levels of which, if we close below, poses a risk of macro corrections lower into that $57,000 region. So I do urge you to read that post and then jump into the video over here. So as we're seeing over here on the daily chart, Bitcoin is still in this macro channel, and a fun fact for everyone today is, according to the current close, we are looking at this 226-day channel, the longest consolidation for Bitcoin in the history of Bitcoin when it comes to structural formations was 224 days. So this is officially now 1 full day longer than the longest consolidation, making this channel, unfortunately, the longest consolidation in the history of Bitcoin's price action, which is actually pretty insane. So there's a fun fact for you. Love it or hate it, that's just what it is. Let's move in. So as we can see, we have got a retest of the midline of the channel. We also have retested and managed to, we'll zoom in over here, managed to actually close that RSI just above the trend line. Now you can see the closing price of the RSI is working on pivots. So this over here at 43.54 was the close. Whether or not we break back down now, it's not going to matter too much until we close the next pivot on the next daily candle. So we do still run the risk of this breaking down and Bitcoin actually dropping lower. We'll discuss that in a second. But while we are above this region, at least for the current daily candle close, it was saved. Again, this doesn't infer that the next daily candle close is going to be bullish. It just tells us that the current close was not particularly massively bearish. So looking at the current close again, we were able to sustain above the dotted trend line. Now, if we look at this dotted trend line back in the history of this 226-day long pattern, what we notice is daily closes above and below the trend line generally results in strong directional continuations for Bitcoin. Now, these directional continuations do not always result in moves to the range high or the range low. We have seen instances such as here where we did go to the range high. We have seen instances such as here, such as over here, such as over here, and over here again where we have gone to the range highs and range lows, but we have also seen instances where we just see strong moves upwards or downwards. A prime instance will be this move over here up to that 64k resistance and our recent move here to 66,000. So we do know that the midline, regardless of whether or not we see macro moves towards range highs or range lows, does generally result in a strong move, at least to a critical high time frame area of support within the channel itself. Now, the next level of high time frame support for Bitcoin is going to be that $58,000 to $57,000 region. So if we do close below this midline, it is highly likely we move into that $58,000 to $57,000 region before continuing, or again, if we lose that, God forbid, we see a continuation even lower. Now, again, the daily RSI will go to confirm that breakdown. If we do draw our trend line in with the RSI from our equal lows, we can see we are quite overextended on the price action. Provided the RSI breaks downwards, it would indicate momentum has flipped negative. This trend now will be in a negative. We will be expecting a correction to retest a trend line. That lines up perfectly with 58 to 57. So you can see how those cards are kind of stacking. You can see how that narrative is starting to develop. Now, what Bitcoin really needs to do to flip bullish here and to prevent this move downwards really comes back to two things. Number one, it comes back to that short-term channel and what happens here, which we're discussing in just a moment. And number two, it comes back to what we just talked about, which was going to be the weekly candle closes. Now, the next weekly candle close of Bitcoin is still a while away. It is still 3 days away. We have, of course, had that positive momentum shift on the RSI. We have got, again, the possibility to see continuations upwards. We are sitting above the 50 moving average, which is fantastic. If we go to the macro charts, we can see over here, if we're just zooming in on this cluster of price action, on the weekly chart, we are sitting above the Gaussian channel upper band, which is again a bullish indication. We are sitting above the Ichimoku cloud upper band, which again is an indication of macro strength. We are undoubtedly in a macro uptrend. The macro charts are undoubtedly bullish, regardless of the fact that we have been in a strong consolidation. This consolidation is bullish and the macro direction of the price action is bullish. But if we do drop much lower, we will start to see some of these macro indicators printing sell signals, which could develop and spill over into a correction. And as we've said already, a drop below 49,000, this 49,000, 46,000 region, as we did call the bottom on this drop over here on Twitter, we would say a drop below that region would result in a high time frame downtrend and officially actually put us into a bear market. So we would not want to see that happen. Do I think it's going to happen? I do not think it's going to happen. In fact, like I've said, I've been exceptionally bullish on Bitcoin. My first entry was over here. My second entry was in this range, and I've been holding spot on that Bitcoin ever since. We've been long ever since. We've been very, very bullish, exceptionally bullish ever since, because all of the indicators are bullish. When they start to flip bearish, we will flip bearish on the macro, but those things have not occurred yet. Now, that doesn't mean we can't see corrections, right? You can be macro bullish and short-term bearish, or you can be macro bearish and short-term bullish. They can go hand in hand. They are not exclusive. They do not have to be the same. Your time frames matter. Your perspective on the charts matter. So taking a look at the price action of here, guys, just because I'm macro bullish doesn't mean I do not understand there is a risk of us to see a correction into 57. That is a real possibility. So let's talk about that, guys. Short-term price action, we have more or less broken down from this channel. Again, we were expecting a continuation lower if the channel were to be broken. We did not expect a liquidity grab this deep. This would be considered quite a deep liquidity grab, considering we're actually sustained under that low point for about 4 hours. This would be considered quite unusual. Now, we'll discuss this in a second when we get to our short-term analysis, which leads me to believe that this actual rally over here It's just an exhaustion rally before we're going to see a continuation down. We'll discuss that in a second. But all in all, guys, let's just assume that this price action has bounced pretty well and it does have strength. What we need to really see for the price action to go back upwards is we need to see this trend line break. This is still going to be the downtrend we marked out in our yesterday's video. This trend line is still going to be the trend that we have been in since the range high retest. So the range high retest, we've been in a downtrend ever since, okay? If we break this trend, we will then be in an uptrend from that downtrend breakout, and we'll be expecting moves into these next resistances, 61.6, 62.5, potentially even 64,000. As you know, guys, we need to see a break above this area, it's 64,000 to see a move to 66, and if we break 66, that is when we are in the long anything and be happy range, okay? Above 66,000 is where we believe the market is going to move to an easy mode. It's going to move to a mode where pretty much everything is going to start moving upwards. Will that sustain for a long period of time? No. But we do believe we will likely see the market turn easy again. So right now, we are in a bit of a hard mode for the market. October has been a rough month. September's been a fantastic month. October has been tricky trading conditions. This period was fantastic. We saw that trend continue. Since then, we have had an uptrend develop. And since that rejection at 64 on the 8th of October, so about 4 days ago, we have seen a whole bunch of chop develop, right? And all this chop developing and these large moves toward the downside and this stagnant volume and everything leads me to believe that something behind the scenes is brewing. Generally, we see algos and market makers jump in and control price action significantly more, as we have seen as we move into significant news events which have not been released to the public. Now, this is of course speculation, but based on my experience in the charts, I would say something is potentially brewing behind the scenes, which we do not have access to information yet, which is causing the price action to act a lot more indecisively, inefficiently, and a lot more choppy. So keep that in mind. I would definitely be classifying this entire range as high risk. Okay, I said that the other day around over here, but I do still expect this entire range to be classified as high risk. Any trade on altcoins or Bitcoin taken while Bitcoin is present within this range should be taken with high risk considerations, okay? When we are above or below, the trend becomes a lot more clear. It is likely we see continuations. It becomes a little bit easier, a little bit less risky, but while we are in this range, I would still classify everything as high risk. So let's talk about this. So we've talked about the bullish case scenario. Let's talk about this short-term rally, guys. Let's move down to a 5-minute chart. Okay, this is our 5-minute chart. As you can see, yeah, it's not looking fantastic, guys. It's not looking fantastic. We can still see over here that open interest has more or less been decreasing. So again, when this bottom is rally over here, we have more or less been seeing open interest decreasing. This is generally a bearish sign when we see price action rising and open interest decreasing. It means short sellers are basically covering their positions. It is generally an indication of exhaustion and weakness developing in the charts. What else can we see over here? We can see a retest of our change of character, our 50 EMA. So if we go ahead and look at this horizontal ray over here, this level over here is going to be the change of character, so the breakdown point of the prior horizontal resistance. This area was support, it is now an area of resistance. So that means Bitcoin is exhausting into resistance. This potentially could be an exhaustion rally at the 200 moving average. We may see the price action topple back downwards, back into these lows. In fact, that is what I'd be expecting until Bitcoin can prove that it's got this strength to continue higher. And what does it need to do to prove that it's got this strength to continue higher? As we just mentioned, we need to see this downtrend break, guys. And that is it for today's video. Thank you for tuning in. Have a fantastic day. Catch you on Sunday. Stay easy, stay safe for the weekend. Don't be too confident to jump in, jump out. Just keep it easy. Watch the charts develop, and I'll see you then.